We just had Sheldon Bennett from DMG Blockchain on an Investor Talk, and we were talking about power and your data centers. Can you tell us a little bit more about your recent deal?
Sure. We just announced the addition of another 10 megawatts of power to our Christina Lake data center, bringing us to 75 megawatts. And just to be clear, the way that our power works, we have two power contracts. One is a fixed rate power with our utility, and one is a non-fixed rate power with our utility. The difference between the two is, one is delivered no matter what at a fixed price. The other one is actually a wholesale market price, so it goes up and down with the market. So it's a little bit different. If the market price is too expensive, we have the option to reject that power price. We also have the ability on wholesale power to hedge that power and pre-buy blocks of power in the future, so we have a stable price if we'd like to do that.
And of course, power is intensely important now. Everyone's talking about AI, data centers, how much power they're going to take, where are we going to store it? And of course, you've been at the forefront of this right since the beginning with cryptocurrency and DMG 10 years ago. Where do we start? How can you comfort investors or explain that their concerns are real, that we're not going to have enough power to have all this AI that we've begun to become dependent on?
Yeah, I think we kind of unleashed the genie of AI. Everybody loves it. Everybody's using it. I've been using it all day. I think AI is getting smarter. It's getting trained to do more. But with a lot of smarts that come from AI or computers, it needs a lot of compute. And to get that compute, you need to run these GPUs, and these GPUs, they consume a lot of power. Data centers in crypto consumed a lot of power. They were doing one specific sort of task. When you look at AI, it's sort of the same idea. It's kind of doing one sort of GPU task, which is using a lot of high band memory. And so that's not going to go away. When you listen to people like BlackRock talk about AI, and BlackRock has trillions of dollars of assets under management, and they say this is not going anywhere but up and growing. You start hearing about a bottleneck in power, and people normally don't talk about power because you have power at home and your lights go on, your washing machine works, all this kind of stuff. Nobody thinks about power until you need it. And then you realize that power is a limited commodity. To create a lot of power, you need a lot of capital. So if you think about a lot of power, think about a dam, for clean power. To build a dam and operate a dam takes years to put together, and it takes years to get the ROI on that for whoever builds it. And you build it once, and it only has so much power that it produces. And we're not building dams all the time. We kind of look out at the market and say, how much power do we need? We probably have a 2% growth of power needs in the market. And so when you're looking at allocating capital to have power today, somebody 5, 6, 7 years ago said, oh, from 5 years ago to today, we're going to need 3% more power than we have today. So we only need across Canada this much more power built. And here's a timeline and how we'll do it. But what we've run into in the last 2 years with AI is a spike saying, hey, we need like 15% more power, way more than 2 or 3 that we were talking about. And we need it now for the amount of demand. And that power doesn't exist. So you're going to keep hearing in the news media this sort of like whoever has the power gets the projects when it comes to AI. And it's very true, because trying to find 100 megawatts, which is sort of the number that a lot of people throw around for what makes sense for the amount of investment into an AI data center, it's hard to find in one place, especially in Canada. Most of our power is concentrated into pulp mills, metals of mining, lumber mills, things that are very industrial. And those aren't in cities, or they're in small towns, on the side of small towns. AI data centers would like to be in cities because of latency. They need a well-trained and large workforce. They need high band fiber, multiple runs. And things like this you don't find in smaller towns in industrial settings. They don't really have the fiber that's needed, and they may not have the workforce that's needed to operate. They usually have the workforce to build it, but not to operate it continuously. And so there's this dichotomy of like, we want this infrastructure, but of data centers, but the infrastructure to make a data center work isn't perfect in Canada. And I think that's why you're going to see a lot of investment and a lot of struggles in Canada over the next few years to be able to meet a new data center demand that's happening right now. And companies that do have power like we do, we're in a great position to be some of the first AI data centers in Canada, as new power needs to be built and constructed in Canada to meet the coming demand.
So the obvious question next is, where are you going to find your experts, though, to expand with the growing demand, Sheldon?
No, that's a great question. There are a lot of traditional data center people in Canada. We've had hundreds of smaller data centers across Canada, so we can find those types of experts. Power Canada is actually pretty good at it. Maybe not the best at keeping that power working in Canada. I mean, you probably heard a lot about the amount of power that Canada sells to the US across the border. If we can keep more of that power in Canada and encourage more development of that power into projects in Canada, I think that we're going to find it'll be much better for our economy. And kind of what I mean is if you look at traditionally this issue that we've discussed for a long time in business in lumber, where we can sell a whole log to the US or to Japan, but we're better off to sell lumber, and we're even better off to sell furniture or manufactured good. And it's the same thing with power. We can sell that power across the border to the US, and they'll turn it into an AI data center and make a lot of value out of that power. If we can keep that power in Canada and put the data centers here in Canada, it's going to be a net benefit for Canada, for jobs, for taxation, for growth of communities. And so I'm hoping that provincial and federally there's a lot of support in the growth of building data centers in Canada versus exporting Canadian power to the US where they'll do it.
So the defense storage contracts you have, is this the same type of thing?
So we're just starting into defense right now. We don't actually have a contract yet. We have proposals out. We're hoping to get a contract soon. Defense is a little bit different. There's been a bit of a change in the way Canada and the US are partnering on defense. And a lot of that has to do with the presidency in the US and the stance, or not the stance, but the reaction that our prime minister has taken. And what we're seeing in Canada right now in defense is instead of relying as much as we do on NATO and the US as part of NATO, we're now looking at how do we rely more on ourselves and how do we become more self-sufficient when it comes to defense. And in that, related to our business, it has a lot to do with data centers and information. And for us, we have the infrastructure for something called skip-rated data centers. And that it basically means like top secret level and secret level, so that the data stays in Canada. It's not shared across jurisdiction to the US or into NATO allies. And there's a lot of good reasons for that in defense, especially when it comes to defense technology, defense strategy, defense communications. Keeping that all sovereign in Canada in SCIF-rated data centers is really important part of strengthening Canada's defense.
Well, speaking of the strengths of DMG, right now you have three different revenue prongs. Do I have that correct?
Yeah, so we have two buckets, but sort of three different revenue groups. Bucket number one is data center operations, and bucket number two is what we call digital asset services. And so bucket number one, there's sort of two revenue streams. One is our traditional data center, which has been Bitcoin mining, which we've done forever. And the new one is getting into the AI side with new revenue and AI and data storage and traditional data center operations. And then the other side bucket is all of our software revenue, which is focused in on Systemic Trust, our trust company that is operating out of Alberta. And it is a regulated digital trust where anybody can put in their Bitcoins, their Ethereum, whatever they would like to have custodied, fully legal and compliant.
And of course, your total assets, I believe I read, was over 122 million.
Yes, correct. And just some color into that, we sit on over 400 Bitcoin itself. So that's, around $40 million just in Bitcoin. That's ours. And then the rest of that is sort of the asset of our data center and other, we own some buildings and we own our substation and things like that. So it just kind of gives you an idea of the asset mixture, kind of, 30% or so is just pure Bitcoin and the rest is sort of physical asset and cash.
So for a company that is barely 10 years old, you've really been hitting your milestones. What's next?
So I think, what you're going to see is something happen, hopefully significantly in data center side that's not related to Bitcoin. And there's sort of two main spears that we're going after. One is traditional data center infrastructure being sold to a third party, which we, would like it to be Canadian in some way, but it may not end up being Canadian, but that's what we're focused on. And the second one is going after military work. We think that the Canadian government has really opened up the military sector in a way that's never really been open before. And this is a great chance to get into a business that, for the most part, is sort of closed if you're not already in it. So it's very rare that there's a lot of openings where the Canadian military is saying, hey, we're looking for new companies to supply services.
Well, DMG blockchain is definitely on my radar screen. And for those of you wanting to get it on your radar screen, please go to the following website. Sheldon, as always, it was a real pleasure. Thank you.
Thank you.